The ongoing Israel and Hamas conflict could affect Nigeria's economy through its impact on oil prices and the global economy. Analysts say any increase in oil prices could benefit Nigeria, but it could also lead to a surge in domestic price of petroleum products, which could affect the country's economy. However, the government's efforts to diversify the economy and improve the business environment could help mitigate this risk and attract investments. But how is this connected, of course, to the entire African continent? Mr. Gbenga Ogurinola is an investment and financial advisor. He joins me live from the United Kingdom to talk more around this. Good afternoon, Mr. Ogurinola. It's really good to see you.
Good afternoon, Tolu. It's nice to be here again today.
Well, in my first conversation, we stayed so much on attracting FDIs. But I'm going to ask you, with what is happening globally, yes, we know what's happening. Israel and Hamas is on one side. We still have the Russia-Ukraine crisis, which is also on the other side. Now, all of this, how do you see it affecting the expected FDIs, well, across not even just the continent? Now, I think globally, what are you thinking? How would this affect? Moving on.
Well, I think that irrespective of what is happening in the global space politically, investors are still looking for ways to kind of diversify their investments and also look for new opportunities in various sectors. And I think the African continent in the last couple of months have actually benefited from this. We saw the G20 summit, including Africa as a bloc participant and a member in the last meeting they had. Also, we've seen other countries individually, making overtures to the African countries. Like of recent, we saw Saudi Arabia, also having an African summit where they could explore the opportunities that exist in the African markets. We've seen Russia also do that some couple of months ago, and some other major world bloc powers. So I believe that irrespective of what is happening in the world, it's even more of an advantage, to the African continent, because the African continent is seen as bipartisan in all these conflicts. And once you are able to cut them, you know that you can always rely on them, or you fall back on them once there's any shock, politically in the world economy. So I think with what is going on in most parts of the world today, the African continent and the African countries, they stand a better chance to even get cutted and get more foreign direct investment from other countries.
That is looking pretty good. But let me follow up with global outlooks and figures we've gotten from the World Bank. In recent times, we see projections and see reprojections. Of course, considering what we have on ground, you can't predict all of this without this contending macroeconomic issues that we face. So what are you looking at, talking about outlook for the globe and, if possible, for the continent, that's Africa's continent?
All right, so when we look at the global market generally, this year has been, in a way, things have been a bit better than we had last year. Initially, the year started with a lot of countries having bloated inflation rates and having to jack up their interest rates to match up with the inflation rates. But over the last few months, we've seen drastic drop, in those inflation rates. We've seen drops also in some interest rates also. So it shows that there's some level of stability, that is coming to the global market generally. Even though we have the Hamas and the Israeli crisis, and also the Russian crisis too is there, but these crises have not escalated beyond projection. And as long as they are curtailed, I believe that the effect on the global economy generally would be minimal. We just pray that it doesn't escalate beyond what it is, because it's a very delicate situation, that we find ourselves globally generally, with this crisis. It could just trigger in any way, in any direction, and just affect the global economy. But as long as it's the way it is currently, I believe that we would see some level of growth and more stability as the year eventually ramps up.
I know we've spoken about the United Kingdom's economy this year for some time with all of the challenges. They had their fair share, just like we have ours here in Africa's most populous nation. What is happening with regards to inflation and other issues as we move towards the end of the year? Purchasing power of people in the UK, energy issues. Can you touch briefly on some of this? What's the update?
Yeah, so the beginning of the year, the government had actually projected that one of one of their major points objective was to ensure that they reduce inflation by half. And well, I wouldn't say incidentally, but as we have it today, as at that time, inflation rate was about 10.7%. And as at today, the newly released inflation is about 4.6, 4.7%. So in a way, they've been able to actually reduce inflation by half. But when we look at what were the major triggers or what actually transpired, we'll see that the major trigger was actually in the energy sector, where the price of energy in the last couple of months or weeks have been dropping, and that has helped to reduce the inflation rates. If we look at some other sectors like maybe the manufacturing sector, we'll see that there's still some level of inflation there, but the energy sector has been able to help to bring down the inflation rates. And it's the same for most countries in Europe and also in the US. The inflation rate has reduced significantly. Currently in France, Germany, the inflation rate is about, I think, 4.5%. In the US, it's about 3.2%. So that shows that the shock, that the world had regarding the Ukraine and Russia war is eventually gradually, being curtailed, and the global market is moving beyond what is happening currently. So in the UK, like I said, it's also a good news in the area of inflation. They're also looking at the interest rate, because the interest rate has been increasing, just to match the inflation. So currently, there's the belief that the interest rates too will begin to drop, as we move into the next phase in the next year coming.
Something that the price of crude might go higher, considering what is happening with Israel and Gaza. Something that, how do you think that would impact us if it happens? Because on the other side, in that same report, it shows that if that happens, the price at the pumps will also increase. I want Nigerians to put that or get that in their mind.
Yeah, so globally, like I said, because they've been able to curtail this crisis, even though it's a very sensitive one, but most economies currently are fragile, and nobody wants to really go into a situation where the economies would be badly hit, as a result of taking positions that invariably is not really their major concern, and if that happens, it's going to add on most economies. But I believe that with the way things are going, Israel and the Palestine, they are not major oil producers that would affect. But of course, the countries that are connected, like Iran and some other countries in the Middle East, are major oil producers, and the effect of those crises could actually trigger a global outrage, and it could affect the global market generally. But as long as it doesn't go beyond this rate, I believe that things would remain calm. In terms of Nigeria, I want to say that with the coming up of a number of refineries, we're talking about the Dangote refinery. Hopefully, before the end of the year, they should start operation. We also have other major interest players, also coming into that sector, like the BUA is also proposing to come into that sector. I am aware of some refineries in Edo State also that are also coming up. So with all that, I think that it would be a good omen for Nigeria if the price of crude goes up and we have all those refineries, working in their full maxima position, such that they'll be able to, meet the local needs, and will be able to save from the foreign exchange that will be derived from the sale of crude oil.
Moving a few weeks to the end of the year, and many will talk about the selling for cash. And that's talking about stocks now. Many would have a lot of buyings and all of that, considering even the purchasing power at this time. Inflation is also biting hard on one side. There are a lot of issues we could look at globally, and they seem to be same currency issues and all of that. They keep rolling around each other. But for the market specifically now, talking about the likes of MSCI's broadest index, Japan's nickel, and of course, Chinese blue chips and all of this stocks. What do you think, what figures do you think will come up as we end the year with regards to this global stock trading?
So when we look critically at all the various major exchanges this year, I think aside from maybe the FTSE, all the other exchanges have really ramped up, this year. Looking at the Nasdaq is year to date. ASI is about 38%, which is quite high. We have also the Dow Jones, and we have the Dow Jones also about 7%, and we have DAC, CAC also, within a two-digit figure of 10%, 13%. So generally, the Nikkei is about 27%. You made mention of that year to date, and for the Nigerian market, we also have a very high all-share index of about year-to-date return of about 38% also in Nigeria. But looking at all that critically, for Nigeria, we've seen the inflation rates go up. We've seen the devaluation of the naira. So when we look at that technically, it's not really so beneficial in terms of what the real return on investment is. But for the other countries, I think it's been a good year in their capital markets. And looking at the way things are going before the end of the year, I think they will be able to maintain that, and probably also move a little bit up beyond what we have. Hoping that the FTSE, that's the United Kingdom exchange too, would benefit from this movement and at least avoid closing the year at a loss, at least so that they will also, like other exchanges, also move up this year. But generally, most exchanges have done well this year compared with what happened last year, and I believe that that will be maintained as we approach the end of the year.
So what would be your advice to investors, yes, this time, that still want to bring their money in? What would you be telling them?
Well, so for the local investors, I believe that with the way things have been in the year, the stock market still remains a very viable place to put the money. And more so towards the end of the year, we see some, like you said, selling. So it's a good time to take position, because after that, we're also going to see companies coming up with their corporate actions, at the first quarter of the new year. So that's in a way would pay off, because this year most companies, especially in the banking industries, have benefited from the forex market volatility, and I believe that would tell in their corporate action and in the results and payouts, in 2024. So for local investors, I believe that the capital market is still a very viable place where they could invest and make some money between now and the first quarter of the new year. For international investors, I think they should just stick to the traditional assets and stocks that are always giving good returns on investment, because the global market still remains a very volatile and very dicey market now because of the ongoing war in various parts of the world. But for bearing any unforeseen events, happening, I believe that globally too, investors would have a good year as the year comes to an end.
Brilliant conversation as usual, Mr. Benga Ogunrinola, Investments and Financial Advisory. Thank you so much for joining us. We appreciate you. I do enjoy the rest of your day.
Thank you, Tolu. It's always nice to be here.